Hi guys, it's your guy here, the unknown trader, okay? And today we'll be looking at something important, okay? It's always threes. 1, 2, 3. Day 1, day 2, day 3. Session 1, session 2, session 3. First hour, second hour, third hour, okay? First push, second push, third push. Weekly cycle, we are most interested in day 1, day 2, day 3. And the most important thing to realize or to recognize is there will always be variations, okay? Variations. Because people forget about variations and then they say this doesn't work, okay? But it does. The only difference is it doesn't come in the way you are expecting always, okay? It's always variations. Hence, I always say spend time on your charts. The more time you spend on your charts, the better you'll understand. Okay? So let's jump into something now. I'm on a 1 hour time frame. I always use a 1 hour time frame to identify the days. I repeat, I always use the 1 hour time frame to identify the days. Okay? So this is gold, and we're gonna be looking at the 30th of June. Okay, and I chose these days because they give a clear indication of the days. Okay, everything is clear and you'll understand it better. And another thing to note is that not every day will actually be tradable. Okay, only take what you understand, okay? Only take setups that are clear. In other words, take things that you are guaranteed that they won't fail, okay? That's the main objective. That's the whole actually that's how it's supposed to be, okay? That's the main aim of trading. Take what is clear to you. If you have to guess it, then stay away from it, okay? Take what's clear, okay? So let's see what happened. They dumped the market, okay? As Stacy always says, it's always a pump and a dump, okay? So they dumped the market. Every time, everywhere, there's gonna be a pump and a dump. If it's an uptrend on the longer term, because I showed you that fundamentals will always win in the long term, okay? So if the overall fundamentals, the overall news released every day, okay, if the overall fundamental says the currency has to go up, it will go up. However, show me one currency that goes up like this, something that just shoots up straight without going down. You never find that, okay? Why? Because that's not how the markets behave. That's not how prices are driven, okay? So there will always be a pump and a dump, irrespective of this, irrespective of the overall fundamentals. It doesn't matter at all if it's an uptrend. It doesn't even matter if it's a downtrend. It's always gonna be threes, and there's always gonna be a dump and a pump, okay? Because nothing goes up vertical like this, okay? That's not how they behave. So let's look at this. Everywhere there's a pump and a dump. Once you understand that, everything is gonna be clear. They pump it up, they dump it, okay? They dump it, they pump it up. They pump it up, they dump it. They dump it, they pump it up. If you look, this market is going up, but it's made up of dumps and pumps, okay? It's made up of pumps and dumps. It doesn't matter where it's gonna end, but it's made up of pumps and dumps and pumps. That's all that the market is made up of, okay? So let's start seeing or analyzing how we can take advantage of this. Okay, we have a market that has been dumped, okay? One thing, on a weekly cycle, Monday is always day 1, Tuesday is day 2, Wednesday there's 3, Thursday is day 4, Friday is day 5. I repeat, I made a mistake. This is day 1, day 2, day 3. Wednesday again becomes day 1. This one becomes day 2, and this one becomes day 3. Okay, always. And then we have a setup where we talk about 3-day breakouts. Okay, that means the market must do what? It must, say for instance, broke out day 1. Okay, I don't want this video to be too long. First breakout, okay, second breakout, and third breakout. Yes, sometimes it can go to the fourth breakout and just give a stop hunt. Okay, but there will always be a pump and a dump. Okay, so most of the time, if they dump it like this, Friday will correct. Okay, because we have ADR. We did mention that for currencies, usually per day, it's they can move 300 pips. Okay, but some days they can even go beyond that. Quite rarely though, they can go up to 600 pips, but they will correct. Okay, for a week it's 600 pip, and they can go up to 1,000 pips, but they will correct. For a day, let's just say mostly it's 200, but they can go up to up to 300 pips. Okay, for a day. Okay, so that's how it is. Okay, so we have 3 days of breakouts. We have a weekly cycle where Mondays day 1, day 2, day 3, day 1, day 2, day 3, and also we have maybe 3 days of rise and 3 days of fall, which is 3 days of pump or 3 days of dump, where they will not break or give a day 3 breakout. Usually what they'll do is they'll give you a signal day, they'll break out the first day, break out the second day, and reverse on that second day breakout, which will be 3 day of drop, because the move will happen day 1 where maybe it's pumped up and then it falls, and that's the beginning of the pump or the dump. Okay, just as we discussed in the previous video. Okay, so now let's look at something very fascinating. Okay, we're gonna look at something interesting. Okay, I don't know which one I should start with, but almost every week is gonna give the same thing. It doesn't matter, every week is gonna give the same thing. Okay, so let's look at, I don't know, which week should I choose? Which week should I choose? Any week is gonna give the same thing. Okay, let's just start with this one, or we can start with this one, it's fine. But you must know that there are some weeks that won't be tradable. Okay, so if we are starting here, we have a pump that happens on a Thursday, and then they break out again on a Tuesday. Okay, and then they give an inside day, and then they break that inside day. Okay, so when you get an inside day, like this, two things are gonna happen. It's either it's gonna continue or reverse, and most of the time, I repeat, they will close one side of the inside day if they're gonna go to the other one. Okay, that's gonna happen most of the time. Okay, so we have a pump. Once you identify a pump, that's when you will be ready to start looking for your setup. Okay, or once you identify a dump. Okay, because not everything is gonna be tradable, and another important thing is give the markets time to set up. Okay, give them time. Okay, give them time. Let them give you a pump or a dump. Okay, and the most safest day to take your trade is day 2. Okay, day 2 continuation, day 2, day 2, day 2. That's the most safest day. Okay, and that's the day I usually love. Okay, so here they pump it up, they bring it down. Okay, but day 2 is not tradable. Why? Because yes, it goes and breaks, but the news, and then this closes as a first red day. Okay, always mark your charts. Okay, always mark your charts, very crucial. Okay, make sure you mark your charts, because what people do is they jump to trading without actually doing the analysis, and that is guaranteed. Most people who are losing do that. Okay, and you might also be doing that. I did that a lot of time. Okay, I knew the setup, I understood everything, but I didn't even mark anything. I just waited to see which one was moving, and you're gonna get lost. Okay, you're gonna get lost, and that's where you're gonna lose. Okay, you don't get lost, because this is it's actually an industry that is emotion triggering. Okay, emotion triggering, they trigger emotions, and once your emotions get all over the place, then it's a goodbye to your plan. Okay, it doesn't matter if you have a plan stick right in front of you, okay, on the wall. Once your emotions are all over the place, it's a goodbye to your plan. You're not gonna follow your plan, guaranteed. So to avoid that, always mark your chart. Give yourself time to understand what's happening before even jumping to opening a position. Understand what's happening, okay? And not only on the day, but over days, okay? So let's see, they pumped it up. Day 2 is the most safest one, but not every day is gonna be tradable. Here they use the news. Okay, they did correct. Okay, they did correct about 98 pips, okay, which was perfect. Let's go to a 15-minute chart just to see. Okay, it's okay. 15-minute chart. I don't know if it's gonna be visible. Yeah, the correction was perfect. Okay, I don't even know why I'm speaking like this. Okay, but all I can say is, when you get a first green day like this, what you do is you take the recent high and the recent low, you draw out a consolidation, and that's gonna be your area. Okay, so as you can see, this consolidates, it consolidates, and it consolidates. And during the London session, what do? They stop hunt everybody down. Okay, they break structure on the downside. But to me, this is a stop hunt, because it's not even convincing. It doesn't qualify to be a break of structure for me. Okay, I have my own set of rules. Okay, so this, if it's not convincing, it's not convincing. You see, it's only 7 pips and it's not convincing for me. Okay, see, this is 50 pips. This to me is a stop hunt. They are here to close everybody who bought here. So basically what I do is I want to write everything out. This will be a stop hunt. Okay, this will be a stop hunt. I don't even know why I wrote D. Okay, it's fine. This is a stop hunt. I just want to use the smallest cases. Okay, fine. Now this is a stop hunt. Okay, and now they take the market up. How many pips from here? 89 pips, 90 pips. But obviously this is not tradable. Okay, so unfortunately that's the reality. Some days will present well but won't be tradable. So for me, this day was crazy. Yes, it was not tradable. Fine. What do we get? We get a first red day. Okay, just after a first green day. This is why you shouldn't take things blindly, because yes, they gave a first green day. The following day they gave a first red day. Okay, so this will happen most of the time. That's why you don't want to enter blindly. Okay, so now we have a first red day. Okay, first red day, important. This is a signal day. Okay, I told you day 2s are the most safest days. Okay, this eventually becomes day 1. As you can see, they did tap a little bit, but it's not convincing enough to be a breakout. But we can see that this is day 1. Okay, this is day 1 of the pump. This is where the pump starts from. It's day 1. So for me, it's not day 1 of breakouts. No, it's just day 1. It's an ordinary day 1. Okay, it's an ordinary day 1. Okay, this is day 1, and let me just give it a degree of roughly 25. Okay, good. So this is a day 1, okay? And this became a day 2. This became a day 2 when they broke out, okay? Became a day 2, okay? When they broke out. But still, again, I repeat, the breakout is not convincing, but it is a day 2, okay? So I'm gonna put this up here, okay? It becomes a day 2, which also becomes a day 1 towards the close, okay? When it closes, it becomes a day 1, because this is a first red day now, okay? And our first red days are considered to be day 1s, not day 1 breakouts, but day 1s. We spoke about 3 setups. There is day 3 day of dumping or 3 day of pumping, which in most cases will not break day 3. Therefore, we will not have day 3 breakouts, okay? And there's a setup where we have 3 days of breakouts, okay? Okay? And again, we have Mondays day 1, Tuesdays day 2, Wednesdays day 3, and then we start recounting again. If it happens like that, then Wednesday will become day 1, Thursday will become day 2, and Friday will become day 3. But remember, it's days of either pumping or dumping, okay? So don't enter blindly, okay? Most of the time, when things are kept constant like that, it's for people to understand in a better way, okay? But don't take things as they are. You must become advanced and you must start understanding things on a deeper level, okay? So what I'm trying to say is, even though we know that Monday's day 1, Tuesday's day 2, Wednesday's day 3, but there are some assets that will start their day 1 on a Friday. Some of them will start day 1 on a Thursday. Just understand when and how they are pumping and dumping. And don't be confused when I say this was day 2 but became day 1. Don't be confused, okay? It is an inside day, okay? But it's where the dump begins, okay? This is where the dump begins, because this is the high. As you can see, this is the high, okay? This is the high. It's all about understanding, okay? Understanding. And sometimes it's very hard to make it clear because people want simple things. People want things that you say it's going to be a day 1, tomorrow it's going to be a day 2. Guys, that's not how the market works, okay? Markets are not perfect. Only your plan and your understanding should be perfect, okay? And you must understand that markets will never be perfect. They've never been, okay? They make the rules and they break the rules, okay? So they don't always follow the rules. Hence, your plan must be bulletproof, okay? And this is why you don't trade every day. If things were so clear, then everybody will trade every day, okay? But because they are not clear, this is why people don't trade every day. Only trade when you have the most obvious setup, okay? So now what are we gonna do on day 2? And I will show you how I mark my charts going forward. Okay, I take the recent high, which is this one. Okay, this is the recent high of the US session. I can take it here, okay? I'll take it here. I mark it like this, okay? So when I mark it like this, let's take this one out, okay? So now I want to see how it's gonna behave on the following day. Yes, I have my day 1 of what? Of dump. Why? Because now they gave a first red day, and the first red day is the beginning of a dump, okay? However, you don't enter blindly. Yes, day 2 is the most safest. Let's see what they do. They come, they stop hunt everybody who entered during the US session. Let me check the time. Okay, yes, this candle was actually for US time it was 9:30. Okay, this is US equity opening time. They engulfed and then they went back. Okay, fine. So they closed everybody who entered during the US session. Literally everybody from the US session is closed up, okay? It's closed, okay? It's locked out. So to me, I will mark this as a stop hunt again, okay? Because that's what it looks like to me, okay? This is just a stop hunt. Why? Because they came to close everybody who entered here, okay? And as Steve always says, welcome to the candy shop. Don't trade until they hit the stops. That's the song he developed to show people that it's important to wait for stop hunts because the market is up to stops. It is only after they've hit stops that they will start moving, okay? So on this day, I'm not going long, I'm going short. Why? Because I have a first red day. Until this first red day is violated or nullified, then I'm not going up. Until then, I'm not going up, okay? I don't care if maybe the Asian session starts going up and up. That's the setup I'm expecting, okay? Because for me to go short, there must be a pump, okay? This is something most people don't understand. On a day 2, we say day 2s are safe, okay? And we are anticipating this to be day 2 well up until it's nullified, okay? We're expecting this to be day 2 because we already have a first red day and we have day 1, okay? Not day 1 of breakouts, we have day 1 of dump, okay? So as you can see, this was a first green day, and the following day we were expecting this to be a day 2 going high because of the signal day. Yes, it did, but it closed as a red day, okay? It closed lower than where it opened, and after stopping hunting people, this is a stop hunt, okay? Closed everybody out, okay? Actually, I really want to understand who was closed out, okay? So for me to do that, let me just move them. Okay, it's quite clear now. With confidence, we know that everybody, actually most of the people who entered on a Friday during US session have been closed out, okay? Because these people up here, I believe they are closed out even though prices didn't reach there because of spread, or else they've been frightened to get out of the trade. Because it will make no sense at all if you are in a profit of 300 pips and then you allow this to come and then you are on a minus, okay? It doesn't make sense at all, okay? So if you entered somewhere here and this one comes, then you are now on a profit of 25 from 300, makes from 425 pips. It makes no sense to me. So almost everybody who is in profit here has closed the position, okay? And that's what they need. They don't want to go with people, okay? Okay, so everybody from Friday, I believe they've been closed, okay? Everybody from Friday have been closed, okay, fine. Because in my previous video, I showed you spread and how they increase it and how they use it against you. Okay, fine. So on this day, I'm not going up, I'm going down, okay? Because of the signal day, okay? Now we need a pump, guaranteed. We need a pump, okay? If we're gonna go down, we need a pump, because if you are using emotions, then you will enter, you'll sell here. You don't sell something that, don't kick it when it's down, okay? Don't kick it when it's down. Don't kick it when it's down, okay? You know, don't kick a person when they're down, okay? So if the move is already moving down, do not enter, okay? Wait for a pump. If we're gonna sell, we want to sell high, okay? Actually, if we're gonna sell, we want to sell high. If we're gonna buy, we want to buy low. So never ever ever sell because it's going down. No, I repeat, no, that's not how we do it. If we're gonna sell, we need a pump, okay? So I will always mark to see that I have a pump, okay? If you want to sell, you must sell high. That's the rule, okay? That's the rule. So I'm gonna mark this like this, and then let me just give it a degree just so that it aligns with my line, okay? And I'm not gonna make it perfect, or I might at least try to make it perfect, okay? But I'm not gonna make it perfect. Okay, 35 is fine. Sorry, because I'm just spending a lot of time here, okay? So this is a mini pump that we need, okay? So now this shows us that, okay, the move is still up, okay? The move is still up. I would okay, the move is still up, as you can see. And then we are not gonna buy a move that's strong going up. Why? Because we talk about this thing every day. DNC, okay? Let me put it here again. DNC. It means do not counter. Do not counter trend strong moves, okay? If it's going up, trend is your friend. DNC, do not counter. This is why we use this line. Do not counter, okay? So what we need now is what I call the angle, my golden angle. This is my golden angle, okay? It's a right angle, 90 degrees, okay? Once I find this, I feel more comfortable, okay? But let's look. If I was, usually I execute on a 5 minute, but if I was to execute on a 15-minute, then I am gonna look for something that's being dumped, okay? It's being dumped, but it's still on the front side. I don't know. It can come and bounce and go up, okay? So I don't know. Fine. It comes down like this. It bounces with a pin. Still, on a lower time frame, they broke out. Okay, this is now becoming interesting, okay? Now we have, on a lower time frame, we have a break-in structure, okay? Let me see. I didn't download much history. Let me see if the 5 minutes doesn't actually take me back. Okay, it's fine. Okay, it's fine because the 5 minute doesn't actually take me back because I just didn't download enough history. Okay, so now what we know now is we have a break-in structure. This is where market structure starts playing a role. Okay, you know, the moment this is a high, okay, the moment they break this high, okay, this is our low. So the moment they break this high, broken it, the recent low becomes our low. Therefore this is our recent low, okay, this becomes our low. And as you can see, the market goes up just like that, okay? And now we have what? Okay, as you can see, we have this high over here, okay, which makes a low here, fine. And then we have here, okay, this is inside, okay, but it breaks down and gives us our first break-in structure. It's a pin, yes, it's a pin, but it's a break-in structure, okay? If something that is not convincing to me, I don't take it serious. But this is a break-in structure, provided we start observing the behavior. This now attracts us to start observing the behavior, okay? Do we have a resistance in place? Let's see. This becomes our resistance, okay? Because now they're broken structure, okay? So when we have this resistance in place, we have a micro M, okay? We have an M. As you can see, this is an M. Good. Now we have an M, and then we broke out of an M. We broke structure, okay? We broke structure, okay? We broke structure, okay? And as we have broken structure, now what are we waiting for? We are waiting for a pullback to punish breakout traders. And then it pulls back, closes as a pin on a smaller time frame. It wasn't a pin, okay? So it goes up again. You see, they pump it up once more. On a smaller time frame, you're gonna see this pump very clear. They pump it up. However, it fails and closes as a pin. So this did indeed propel people to take a long position, and there are people who took a long position because this candle was an engulfed, which engulfed this whole candle. And usually what they do, it's only when we have a couple of seconds left, maybe 20 seconds, that they pull this down and it ends as a pin. Usually they'll take it up, hold the level, propel people to take a long position, and when we have couple of seconds left, not minutes, seconds, yes, they will bring it down and close as a pin. And immediately what do? They engulf the pin. They even engulf the previous candle. So here they've engulfed, this is a 15-minute candle, they've engulfed the whole 30 minutes. Interesting, right? They've engulfed the whole 30 minutes. Okay, so everyone above here is literally trapped. Everybody going up here is trapped. Okay, and that's what we want to see. Actually, everyone going up here is trapped. Okay, on a day 2, the most safest day, everyone going up is trapped. The market is now broken down. How do we know? I use this right angle. We are on the other side now. Okay, broken up from this line, which we do not counter. Good. They formed a pattern, an M, and broke it out. Okay, and they broke out of structure. We have a break in structure. They were going up, now they've broken structure down. Okay, good. Now they've engulfed the break in structure. So this is a clear entry. Okay, this is a clear entry for me. I want to keep my stops less than, if it's gold, usually I want to keep them less than 20 pips. Okay, but okay, now you see this is a very big stop. I'm not gonna do that. So what I'm gonna do is I'm gonna go to a smaller time frame. Immediately when they break here, I go to a smaller time frame, 5 minutes and 1 minute, and that's where I start observing their behavior. We have the resistance in place, we have our pattern, break-in structure, everything is good. It's a day 2. Okay, and on a smaller time frame, usually I will get my entry somewhere here, and that will lower my stop losses, make it 20. Less than 25, less than 25, good. Yes, it's called anyway. Less than 25, it's good for me. Okay, so it's gonna be roughly 22 on a smaller time frame, but the behavior is gonna be the same. Okay, there will be an engulf on a smaller time frame. I don't open a position if I don't find an engulf. If I find a pin, then it's a bonus. Okay, because a pin shows that they send people into the wrong directions, and an engulf shows that they've shifted the zone immediately. Okay, and now for profit you can target, because on a smaller time frame this will be much more clear. You will have your candles coming down up to here, and this won't be a pin. Okay, so what you can do on a smaller time frame, you can take the high. Usually I take bodies. I don't take pins. But because this is a bigger time frame, I will, because I know that on a smaller time frame I will actually get real candle closes rather than pins. Okay, so what I do usually, I take an expansion of 2 up to 3. Okay, 2 up to 3 based on the bodies. And on a smaller time frame, I don't know, maybe the body will end up here. I don't know. It's just that I didn't download enough history to go to a 5-minute time frame. But as you can see, they did come and hit my 3 level of take profit. Okay, so literally this is roughly 130, but I don't think I will hold that much. And if I'm taking 3, go to my previous video, you'll see. If I'm gonna be taking 3, what I usually do is I subtract 5 pips. If it's gold, I'm gonna subtract 10. Okay, currency 5. Okay, yes, and then my take profit, it's 10 pips above or 5 pips if it's a currency. That's what I personally do. Okay, that's what I personally do. Wait. So I believe this is quite clear based on how I take my things. Okay, so almost every week is the same. Almost every week is the same. It's just that most of the time, most of the days won't be tradable. Okay, but day twos. These are my favorite. I love day two continuations. Okay, because usually they do produce day twos. They are the safest days to trade. Okay, so I believe this is a bit clear. I don't know, but I believe it's a bit clear. But for me, I wouldn't hold for so much pips. I wouldn't for 131. The thing is, I don't have that much patience. Okay, when I'm in a trade, I have patience to wait for the setup and everything. But in terms of holding for many pips, no. Usually what I'll do, I'll take, because I always open 3 positions. Okay, depending on my overall size, I divide it by 3. Okay, most of the time you'll find that, okay, it's gonna be 4 positions and the last one will be small. Okay, so just to give an example, say maybe if I want to open a lot size of 1. Okay, what I'll do is I'll open 0.3. Okay, 0.3 positions and 0.1. Okay, so overall I'll have a 1 lot size. That's if I want to open a 1 lot size. Okay, so what I will do is 1 position will take roughly 50. If it's gold, then I can go to 75, or mostly it's gonna be 50. Okay, that's 0.3, and the other one will usually be to the low of the day. Okay, but in this case, as you can see, we had a break of structure. Okay, we had a break of structure which started the pump here. So what I will usually do, that means most of my positions will take profit here, guaranteed. Okay, so I will have a position that takes at 50. I will have 1 or 2 that takes at the low of the day. Okay, and I can just leave 1, but hardly. And most of the time, if I'm gonna leave the smallest one. Okay, why? Because I don't want them coming back into my position to close me. And the one for 50 makes sure that I get paid. If it's a currency, there's one that's gonna take a 25 pips guaranteed. Why? Because it's easier to hit 25 pips. Okay, and when it hits 25 pips, that means you got paid for opening or executing the position. Okay, and then the other ones can go to your target. If it doesn't reach your target, fine, you got paid already. Okay, that's what I want to make sure. And I don't trail my stops for all the positions. There are some positions that will allow them to come and play. Maybe if they want to pull back. Okay, if they want to correct nyana, I'll allow them to do that. Okay, without trailing my stops. But usually there is a position that will take at 25 if it's a currency. That ensures that I get paid. Okay, because sometimes you don't want to be in a losing position forever, and you want to minimize losses and maximize profits. Okay, and that's highly crucial. Okay, because if you get paid 25 bips, say maybe you are taking for instance 0.3 takes 25. Okay, takes 25. Okay, that's a lot. Okay, because it's more than 75. Okay, so you got paid for doing the work. I'm just giving an example. I'm not saying that's how it's always, but I'm saying you must make sure you get paid. Okay, period. Make sure of that. Okay, even if they can go 30 pips, come back, you already got paid. Okay, so even if they close you or close the other position, then you are at break even or even above. Okay, so that's what I do. But I don't usually trail my all my stops after each pullback. No, I will always trail my initial position, guaranteed. Why? Because you don't want to be exposed to the market. Okay, you want to make sure that you're actually in the market using the market's capital, not your capital. Make sure you trail your stops, all your stops. Okay, trail all your stops to break even, and then when they then get paid, and then give them space to play in case they are coming back for a pullback. If they come back and close you, you got paid, plus you are not exposing your own capital to the market. Okay, that's crucial. So this is day 2, okay, which eventually becomes what we call day 2 breakouts. Okay, I just want you to understand how I do my things. Yes, it did break out. Okay, it did break out, because if I remove this line, you'll see that here's the low. So yes, it did break out. This becomes day 2 of breakouts. Now I can remove the day 2. Why? Because I am crystal sure I am on day 2 breakouts. Okay, and now I am expecting at least day 3. Okay, is it gonna be a day 3 breakout? I don't know. Okay, I don't know. So let's look at day 3. Yes, they actually pull back about 167 pips. Great. But look at what they do. They close both sides. Crazy. For those who want to stay in the market and get every single pip out of the market, okay, well, you are in for a big surprise. Or you were in for a big surprise on this day. Why? Because they did this crazy thing that they do. Okay, and sometimes I laugh when I see this, because usually you do get time to get off the trade, and you shouldn't be guessing news. Do not guess news. Okay, wait for the news to play out, because once the news have played out, now you know you were on day 3. Is it day 3 breakouts? We don't know. What we know is that we have a day 3. That's all we know. This is day 3, or at least this is an expected day 3. Okay, because guys, to be honest, there are certain things you'll have and certain things you won't have. Okay, we know this is a day 3, and for me personally, on day 3, based on the behavior, I'm expecting two things, one of two things. On day 3, I'm expecting it to go up or down. Okay, it's gonna reverse, it's gonna give a green day, or else it's gonna go down. Day 3, they do that most of the time. Say for instance, they can come and break out here, then reverse. They broke out and then they reversed. Okay, this candle opened right here, it went down. What did it do? Breakout. Day 3 breakouts. Okay, not enough to get the 3 breakouts into the market. Why? Because it was a pin, but they did break out. Okay, so what do we have? Wait for the news to settle, and then after the news, that's when we start checking what we have. After the news, one thing we are certain about, we have a break of structure to the downside, which came as a pin. Okay, but we must observe the behavior. Okay, okay, this is where I'm gonna allow time, but I don't think I was gonna trade. Nah, I didn't even trade this day, right? Yeah, I didn't. Why? Because of the size. So for me, this was a pause. Yes, the setup was perfect, guys. This is all we need. We need a pump if we're gonna sell. We need a pump, okay? We need a pattern, okay? And we need to be on the other side. But this one for me, you know, I don't know, but it's just a little bit messed up, okay? It's messed up. So perfect, but messed up. Then so we do have day 3 breakouts in the market because they ended up breaking day 3, okay? They broke it and broke it again. There was some great opportunities on this day, but remember, it's all about what makes you comfortable, and it's all about what makes sense to you. This, to me, this is not what I want to see, okay? This is not what I want to see, because they've cleared both directions. What are you left with? You don't know where they're gonna go, okay? Because they've already done the job you were expecting them to do, okay? They already did that. So right now, yes, they stop hunted everyone from the breakout from the previous day, okay? But we don't know what they were gonna do. They could have just consolidated in the center. So I didn't even take this day. It didn't make sense to me, okay? And then as the week goes to an end, this is actually what I'm looking for. But now, look, they dumped it, they dumped it, they dumped it, they gave an inside, they dumped it again. This is a lot of dumping. This is a lot of dumping, okay? So certainly there's gonna be a correction, guaranteed, okay? So when you look at a weekly template, they dumped it, day 1 breakouts, day 2 breakouts. Wait, okay, wait a minute. Yes, this is day 1, okay? And this becomes day 1 breakouts. It's a day 2 which became day 1 breakouts. I don't know why I wrote day 2 here, okay? It's day 1 breakout. Why? Because if we go to Friday gave a first red day and a day 1. There was no breakout, okay? So we only got the first breakout when they broke the low of Friday, okay? So this eventually made this one day 1 breakouts, and this made this day a day 2 breakout. I don't know where I got day 3. I think I made a mistake along the way, okay? So this is day 2 breakouts, okay? I told you, variations, okay? Now, what do they give the following day? This is day 2 breakouts. On day 2 breakouts, which is day 3, okay? It's day 3, okay? But it's day 2 breakouts, okay? So those are the things you must pay attention to. And then you just have to look at how they behave the following day, okay? Because this is my day 1. First red day, it's my day 1. Day 2, but it's a breakout, this which makes it day 1 breakouts are in the market. Day 2 breakouts are in the market the moment they break this. Day 3 breakouts, okay? Let's see. Now on this day, let's see. This is an inside day, okay? Inside day. I'm not gonna show any entries. The video is getting long, but I can just show some of the things. Now I'm not gonna go into detail with this one. This is inside day. Inside what? It's inside day. Every week will be the same, okay? This is an inside day, okay? Okay, which I could have taken as a day, day 3 trade, day 3 breakout trade. But usually what I want to see on a day 3 is I want it to trade, okay? I don't take it, I want it to trade. So this is an inside day. Inside day tells you it's gonna reverse or either continue, okay? So now we have our day 3 breakouts, okay? So these are the small things, okay? Day 3, these are the small things that if you understand can really change your trading life, okay? This is day 3 breakouts. Day 3 breakouts, what are we expecting? A reversal, because once day 3 breakouts are in the market, they are more likely to reverse. And when they reverse, day 2 is the safest trade, okay? Because this one, as it reverses, it becomes a day 1. Why day 1? It's a first green day, okay? It's gonna be a first green day, okay? This is day 1, okay? Why? Because now it's a first green day, okay? First green day to me, it's a day 1. It's not a day 1 breakout though, it's a day 1, okay? This helps me formulate thesis for the upcoming day, first green day, okay? I'm sorry for this, but always mark your charts, okay? This is the safest trade you can take, okay? Provided it corrected 25 pips. This corrected more than 50 pips. This is a perfect one to take, okay? It's a perfect one. Just take the recent high and take the recent low. These 2 points will give you your consolidation, and that's a point from where you can build your thesis going forward, okay? So now they didn't come to the low. Now you have to draw your consolidations. You see, they consolidated, broke up to the high, okay? This is usually a sign that they are going to move up, okay? Cleared stops, clear stops. Then they went down, and then they pumped the market up again, of which your take profit target could be here, okay? This is a take profit target, okay? Then you can go to a lower time frame to see if you'll have an opportunity. As usual, this is during the, what time is it? It was pure the London session, so I didn't have a trade here, okay? And I'm not counter trending. I don't counter trend, okay? On day 3, I'm expecting a reversal, and this one was so clean. It wasn't messed up by news. Nah, it wasn't messed up by anything. Now look at the behavior. I told you, if you're gonna sell, look for a pump, okay? If you're gonna be selling, look for a pump. If you're gonna be buying, look for a dump. You see, now they've dumped the market. Now you know the market has been dumped. On a smaller time frame, you'll get a good entry somewhere here, okay? And let's check, what time was this candle? Oh boy, so perfect. This is the Brinks trade, is it? Let's check. No, it's not the Brinks trade. It's 30 minutes into the first hour of New York session, okay? They give this beautiful engulf, which is still on this other side, okay? And then they kind of pulled back before going up, okay? So on a smaller time frame, I believe, I didn't download enough data, but on a smaller time frame, that's where it presented a very good entry, okay? Because it went down, then they engulfed everything. Once they engulf, pin engulf, they are shifting the zones immediately, okay? Shifting the zones immediately after closing everybody from the London session. See, they closed everyone from London session. So basically, look at the behavior, okay? Sometimes the market will show you or give you simple signs. Look at the behavior. Look at the behavior. They are taking people down. Why? Because they want to go up. Look at the behavior. They are taking people up. Why? Because they want to go up. They want to go down. Why do they correct most of the time? Usually it's because there are traders who jump into the move when it's going down, and there are people want to hold forever, okay? Hence why they'll always pull back, okay? Look, they take you up because they want to go down. You see, if on a day 2 they behave like this, then you can expect something like this. It happens. I can't put it in percentages because I didn't do the calculations, but it happens most of the time. If they're gonna sell, they'll take you up. If they're gonna buy, they'll take you down. Drag you down, drag you down, drag you down, drag you down. Everything is so perfect. Before you know it, they're up. And who is gonna get closed? Everybody from the previous day is closed. So if you are holding a position for many days, which they want you to, then you're gonna exit the market holding nothing. Okay, so greed sometimes is dangerous. Okay, and look, they keep going up. They come even for the guys who entered after the pin. Okay, they don't go far into closing the whole pin, but it's enough to scare everyone who is in profit out with a smaller profit. Remember the objectives. It's not to give capital to many, it's to take it. And when they take it, they don't want to go with those who are right. They want to shake them out of the winning position. So basically that's what you'll find every week. Just know when and when not to open a position, okay? And don't overtrade a single asset, okay? So you see, actually they did close everybody with spread. That I can say boldly. Everybody who bought this pin was closed by spreads. Because if you look carefully, let's see how many pips this is. 23. This is nothing. I showed you in one of my videos, I showed you a spread going to, I think it was 25 pips on a currency. So tell me, what is 23 pips or 20 pips on gold? Gold is highly volatile, so I believe everybody here was close. It only takes a single whip, whoop, okay? Because in my previous video, I showed you spread, and I can even show you spread even now again. They do have a button that they play with, called spread, and then this goes on and 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 on, okay? On and on and on. Okay, when this day traded, then you knew that this day was fake breakout, okay? And you knew that, okay, this was a first red day. But even based on the open, you know that this is, okay, let's see. Yeah, basically, you know that this is the first red day, right? It's a first red day, okay? So these are the variations that they will use to play with, okay? As long as you know that day 3 breakouts, you have day 3s of dump or pump that won't actually give a day 3 breakout. So as the day goes, just mark your charts, know what is happening, know what is not happening, and you'll be okay. Just know when to open a trade and when not to open a trade. As you can see here, there were news, boom. But for me, I didn't even take this, because by the time it broke out, it did pull back, present a chance on a lower time frame, but for me, I didn't, okay? Because at the end of the day, it's not about being smart, catching moves and whatsoever. It's about being, yeah, there was about 80 pips, I believe, but for me, it's not about that. It's about taking the easiest thing, okay? So all in all, I believe this will clarify things. Just make sure you mark your charts, okay? Mark your charts every day as it goes. And if you're gonna be buying on a smaller time frame, if you look here, it did present one last push to the at what time? Let me see. Yeah, at 3 o'clock South African time, they presented one last push. That I believe on a smaller time frame, you did get a very good thing with a nice engulf, okay, for this move. And by the way, it was expected. If you think they're just gonna dump the whole week and not punish, then you got it wrong. Okay, why? Because when they correct like this after a big dump, it's them locking profit, okay? A pullback, it's how they lock profit. So if you expect them to go on and on and on without locking profit, then I think there's something wrong. Just go through your chart, back test them, and be real. Just be real with yourself, okay? Be real, okay? Because I didn't just select this week. As you saw, I just went to any week and we went through this week and how we traded, okay, and how you can formulate your thesis and how you can do your analysis and all sort of stuff. Everything is easy. The only problem is when you go to the charts, you start getting emotional, emotions start running all over the place, and that's when you start abandoning your plan. Okay, day 2's highly profitable. Day 3 breakouts, highly profitable, because this ones come with very big explosive moves. And day two is the safest one. Okay, because they've locked the high, they don't want to release anybody. The only reason they're going back up is to scare all those who are in profit, shake them and kick them out, then they continue. Okay, so this is it. Day 2's are very simple, highly profitable. And day 3 breakouts. Okay, day 3 breakouts are profitable. Even day 3 where they don't break out, they don't give you day 3 breakouts, it's still a good trade. Even if you're using a weekly template, you should be able to really tell what's happening, because yeah, this will happen always. And yeah, pay attention to day 2's, because the psychology behind day 2's is what I love. Them coming to scare everybody out of the move. Why? Because they are greedy and they always want to go alone. So day 2's are highly profitable. Every week, day 2's are highly profitable. Okay, and most of the time they will perform as expected, unless of course there is news. They can use news to just complete the setup quite quick without anybody. Okay, because actually it costs less for them to move the market when there is less people in the market. Okay, so those are some of the things you just have to understand. And thank you for making it this far. I wish you a very prosperous journey that will come through a lot of practice. Okay, guaranteed practice, you'll understand this. Okay, thank you guys.